Delighted to have John Stack of Canaccord, who's going to moderate this, and I'll let him introduce the rest of his panelists.
Yeah, thanks, Al. That's great. Are we square? Yeah. All right. Well, good morning, folks. Al, thanks for having me back again. And I think this has been a great session. And the intent here is actually to be somewhat upbeat, kind of instill some experiences from this great group that we have up here. To my immediately right here, we've got Ron Epstein, heads up Aerospace Defense Equity Research at Bank of America Merrill Lynch. John Raviv heads up Aerospace Defense Equity Research at Citi. We have Shawn, Vick, chairman at Global Jet Capital and partner at Aero Equity Partners. And Vincent, who's the founder, creator at JETNET IQ, and also runs his own consulting business as well. So the topic is, why is making aircraft so difficult? And I think there's a lot of innovation and a lot of enthusiasm in terms of sort of what this revolution is about, and part of that obviously is going to be making aircraft. And I think part of the thesis is innovative technology, disruptive technologies. Do you need to make an aircraft company? Should you be a component supplier, manufacturing that technology and selling it to all OEMs? Should you partner with some existing players? And so I think that's sort of what we're going to explore here from this group. And the intent is, again, to sort of share some experiences that may be helpful, and not to say that you can't do things, but maybe reinforce some themes and some experiences that have happened. So to sort of maybe set the stage here, Ron, maybe you could start off and sort of share some thoughts around, where are we right now in the, with global aircraft manufacturing? There's been some consolidation, some companies are struggling. Some thoughts about maybe how many OEMs we need to have, and we'll kind of share some thoughts around that.
So at a high level, if you look at large commercial aviation, we're largely down to two manufacturers, Boeing and Airbus. If you assume that ultimately the European community is going to approve the Embraer deal, Boeing and Embraer will be largely one company, and Airbus already has the A220, right? So you're down to two Western primes, and then you've got what China's trying to do with Vick and Comac, and then there's some projects going on in Russia. When you look more broadly at commercial aviation right now, this is the first year where we're starting to see a deceleration in air traffic, right? So the world's airlines have been profitable for the last decade. That's the first time in history. But that profitability seems to be declining a bit. If you look in 2018 and 2019 year to date, we've had 10 airlines go bankrupt, just most recently, the airline part of Thomas Cook. And this year so far, I think if you include an order for 8 Dreamliners from Air New Zealand that came out this morning, we've had 18 orders this year, right? So this is the worst year for orders in a quarter century, and in fact worse than 2008 during the financial crisis. So it does seem like we're a little bit on the backside of a cycle. The sky's not falling, there's big backlogs, but it does seem like things are slowing a bit for large commercial aviation.
Yeah, thanks, Ron. John, maybe some additional thoughts?
No, but it's true. There's an inevitable slowing, I would say. I mean, at a certain point, the orders have to end, the backlogs have to burn down, especially for the large OEs. But there certainly are some rising concerns. To go with kind of a level deeper into the BizJet world, what's funny to me is that in the commercial aerospace world, as Ron mentioned, you're down to 2 really, and maybe talking about adding a third over time in China. In the BizJet world, the conversation is the opposite. Is there are too many OEs? We're talking about subtracting OEs here. So I'd say that as some cracks perhaps come up in the civil aerospace world, the business jet cracks, again, it's not specific to this conference, but just from an investor perception perspective, the cracks in the business jet world seem to be more acute right now than in civil aerospace.
Yeah, Shawn, and maybe Rolly, some other thoughts on that?
Sure, and I'll have to layer on your comments because I'm most familiar with the business aircraft community. With 5 majors and then a half a dozen other players at some stage of development, there's far too much capacity and there's model proliferation to the point where you've got an abundance of choice based on your mission profile that you're trying to fulfill, and that leads to significant price discussions because it's a very expensive proposition to create, maintain, and build the facility, the infrastructure, the people, the talent, the engineering capabilities to compete in this world today. So ultimately there'll be consolidation, and probably the sooner the better.
Yeah, I want to echo that point. I think consolidation is coming. We're headed into a cyclical downturn. There's no question. About 80% of our indicators are suggesting that. So that's what we're calling for. So downturn in business aviation in particular. What we see in terms of consolidation, maybe not so much OEs going away as product lines going away. There's 5 product lines in business aviation that are producing something like 50 airplanes a year delivery. So pretty good programs. But then there's 35 programs that are producing the rest of the, 400 or so. So that's 10, 11, 12 airplanes per program on average. If we have a downturn, the consolidation is going to occur in terms of shutting down some of those production lines.
Yeah.
I would just add that for the purposes of this conference, I would say the investor investor perceptions here is that this is it's generally good news. That, getting more people in the air is good for the industry. It attracts new talent in. It gives a sense of some future growth. In the near term, there's always these cracks in the traditional industries, but I'd say that that conceptually there's a lot of excitement in terms of what can be in the future. I don't mean to speak for Ron, but I would say that the everyday conversation we have with our clients, the UAM market is an interesting idea, but it's not really having any material impact right now, I would say.
Yeah, I'd say in public equity markets, the kind of stuff that's been presented here isn't really part of the daily conversation, right? I mean, I would say, not to be Debbie Downer, but I will be for a moment.
It's okay.
When you talk to public equity investors and you start talking about the infrastructure investments that are going to need aircraft that aren't certified yet, the thought what if there is a mishap, so on, so forth, the list goes on. Pitching this to a public equity community is a very high hurdle. And if you put it in perspective, there's not many startup industrial companies. Probably really the only one that kind of jumps out at me that's publicly traded startup would be Tesla. And those that have followed it know, and part of it has to do with, I guess, its management. It's been a pretty volatile story, right? So industrial investors generally don't like to invest in things that don't exist yet.
On the public side.
On the public side.
Okay, yeah, thanks guys for that. Yeah, and remind everyone to tee up some good questions on Slido, sort of in that as well. Rolly, maybe we'll work our way back down. You and Shawn obviously have great experience, working at multiple OEMs. What is it sort of the critical success factors, and what does it take to build a successful, aircraft manufacturing business, sort of soup to nuts?
I'll start. Shawn will have many things to say as well. I think it starts with an airplane, obviously a concept, but more than that, it starts with a leader behind that. And I see that in this conference. I see visionary after visionary. That's really where it begins. The reality, though, is that when we advise clients who are wanting to get in this business, the wannabes, and there's a lot of them, and we love that, but it is so much more difficult than you think. It is going to take so much more capital than you think. Even if you're very good at this, the back of the envelope is $10 million to get a prototype in the air, 10x of that, so $100 million to get something certified, and then 10x of that to get a production line going and get a service network and brand up. And then we're only beginning. Very few OEs have done it. Honda has tried, and they're continuing to succeed where they can. One airplane company. They started about 20 years ago. Embraer, I think, is the better success story there, but it's still, it's a building brand.
Yeah, I could only echo that. I think if you look at the successful OEs, you can trace their heritage back, 40, 50 years. The infrastructure that's been put in place, the capabilities that have been built, the service portions of their business that now, accumulate to billions of dollars per annum for each one. That sort of steady cash flow and predictable earnings is absolutely necessary. I think the other side of that conversation is around, so why is it so difficult for somebody to get in and start up? And I think all too often people look at only that information which confirms their point of view, not the information, that might present some fairly pragmatic challenges. And it is, at the end of the day, ultimately a search for capital. And to your point, and I think it's very well said, for industrial investors, they want to see something that's certified, has a track record, has a market, and has, candidly, the team and the capability in place to execute. Because thinking about it is one thing, executing on it is an entirely different issue.
John, Ron?
Yeah, maybe I'll just jump in, right? If you go back a little ways, I mean, I had a voice in the whole debate around Eclipse Aviation. Remember that one, Rolland? Eclipse had an outstanding board, right? If you look at all the members on the board, they had a fantastic board. They were extremely well capitalized. They had a fantastic idea. Right at the time, it was a personal jet for less than $1 million. I think it came out initially at $850,000, and then kind of over time, reality struck. The engines that they wanted to use, they were these little Williams engines. I think they were turbines that were taken out of a Tomahawk cruise missile. Several 70-pound engines. They were kind of cool. They couldn't get certified, right? They couldn't pass the bird test. They just shattered. So then they had to move up to a bigger Pratt engine, and the costs escalated, and then eventually it didn't pan out, got sold, and I don't exactly know where Eclipse is today, but that was probably the best capitalized aircraft startup I've seen in my career, and it was very difficult for them, and it wasn't for a lack of trying and having good people and a good board and capital. So,
John, anything on that, or?
I guess just one thing that does tend to sink projects is assuming lack of change when there always is change, and especially if it's things that you don't have any control over. And that's a very generic comment, which would probably apply to Eclipse and many other experiences out there.
Yeah, I mean, maybe to get a little bit more granular, I mean, unfortunately, and I think Al last year had this sort of the tombstones of the various, aircraft startup companies. We just talked about one of them that didn't quite make it. Are there specific aspects, of the business model assumptions that people sort of stumble on? Shawn, are there specific areas that you think people should be thinking about? Maybe Shawn then Rolly. It would maybe be applicable to sort of folks within this space here.
Well, when we think about, particularly the last speaker and all of the really exciting development projects that are there. And, as an aviator, my whole life, I look at that stuff and, it does have the impact of getting the blood coursing through my veins a little bit. But I look at that and I think, right, so scalability and cost, and where are you going to find the appropriate source of capital to develop that out? And to me, and we talked about this a little bit, yesterday, I'm actually looking for the unintended consequences of this technology build. One comment that came up was the first responders. When you absolutely positively have to insert a human being somewhere and the risk is worth the reward, you're going to get on one of these vehicles a lot sooner than you are if you're getting off of a commercial flight from London to JFK and you're going to jump on it with your family to go to downtown Manhattan. One of those will be much more easily adopted than the other. So when I see this, I think about those applications, critical need, demonstrated capability, high tolerance for risk. And I would expect to see that proliferate. And then the other areas, what are all of the outcomes of this technology on the electric motors, the ever smaller battery size with greater output, and what is the unintended consequences of that technology across all of our lives that we can't see right now? To me, that's the fog through which I'm trying to look to see what's next.
Rolland?
Yeah, interesting. worked 16 years in an OE, and I know Shawn's had a similar experience at some really big OEs in this business. The question we're staring at, why is making money difficult in this business? How do you make money building airplanes? Actually, most of the OEMs don't make much money building airplanes, right? It's the old razor blade thing. And aftermarket margins, parts, et cetera, is where money is made. And Shawn, I think we were talking about this yesterday. In this new world of urban air mobility, are these vehicles throwaway? What is the business model assumption regarding aftermarket revenues? Do these airplanes or vehicles just kind of go away? Are they plastic? Are they meant to be durable? I don't know. And where's the money? Traditionally, the money is in parts in this business.
Yeah, I would add to what Rolly said. If you look at all the primes, I mean, it's generally, unless you're special, it's kind of like an 8 to 12% margin business. And given the amount of risk you take, that's EBIT margin. The return profile isn't actually all that great. Or if you look at the parts manufacturers, they do much better. That's why there's a huge push today by Boeing and Airbus to try to get more of the aftermarket. Even for them, a global duopoly with huge barriers to entry still can't get out of their own way to make better profits. With years and years of backlog, you would think both those companies could just, print profit like you wouldn't believe, and it's difficult for them. So when you think about the business model, and I agree with Rolly, it's got to be more than just selling the machine. There's got to be an equation for the value over the life of the machine.
That leads us into the next topic, John.
Any sort of questions from the audience, from the floor? Are you facilitating something? Oh, there we go. Okay, good.
Yeah, just a question. There are a few people who have presented here, who will present here. So you have Ampere and MagniX, who are retrofitting planes, and they're starting to test fly those planes this fall. And you've got George Bai with the presentation you made yesterday. When are you going to be prepared to begin to finance these aircraft?
Right, so here, I mean, I can speak from my point of view. Ron, I'm not soliciting banking, I'm not allowed to. For Bank of America to raise equity, you would need to show some level of profitability and a business model that has some sustainability, period. Right?
Sorry,
like for me to go into an institutional investor's office and say, hey, look, this is really cool. I think it's really cool. Look what they could do and what they're doing today. What they're doing today has to have some foundation that you're building off of.
I'm sorry, I wasn't clear. With regard to a flight school that's already existing and is profitable, and they're replacing their fleet, and they want to replace it with George's aircraft, when are you going to be willing to provide financing for those aircraft to be purchased by that training school that already exists and was previously earning profits?
Shawn?
I think we'll have to watch the development of the airplane, its actual performance. Let's use Aerospace's airplane as the specific example. Compelling story, right? Exceptionally low operating cost, exponential improvement on that front. But, did you note that the acquisition price of the airplane was still $500,000? And that's at this stage in the development. And the likelihood is, based on past experience, that is not going to go down. It would be wonderful if it did, but I wouldn't put my nickels or my dimes on that, which means it's likely to go up. So really the question is, for that flight school at $500,000 a pop times 10, 15, 20 airplanes, can their business model, right, generate the cash flows necessary, right, to underwrite that risk properly, over a 7 to 10 year financing scheme? And I go back to the asset price, and that's a question mark for me. The conversation we were having about residual values on these airplanes, I think that's going to be upended because if, we're accustomed as, steam gauge sort of oriented aviators and users, hurtling headlong now into the, 2020s, becoming accustomed to a different type of technology in the airplane. But at the end of the day, those airplanes are conventional build airplanes with an electric motor that should simply be pulled out and put back in. Why wouldn't that asset last 50 years or more, just like the 172 and the 182 that most people that are in flight training today have the privilege of experiencing? So to me, I go back to the asset cost, Brian, and is it actually affordable for the flight school?
One point I would add, just to rewind a little bit to a comment that Shawn made before. The technologies that are developed by the companies here could have huge applications in other markets. So meaning, if you develop this technology, do you have to put it on your own platform? I mean, if you will, sort of the elephant in the room in commercial aviation is environmental impact. And you're seeing more today, particularly in Europe, around flight shaming, carbon offsets, all that sort of thing. Can the technology developed in this segment of the industry be applied there? Yeah, probably, and probably pretty darn profitably.
Just to tie on, and we may want to touch this later, but where I go with that topic is if you think about all of the infrastructure that was built for the transportation industry as a whole, right, coming out of World War I and World War II, it was nation building, okay, in this country, right? The interstate highway system, the airports, 5,000 airports, okay, plus. There was an impetus under the auspices of nation building, developing an economy, right, making ease of transport, ease of human movement that drove that. What I'm actually hopeful is that it is this next move towards addressing the things that are clearly beginning to impact the planet. It is not going away, the climate change debate, regardless of what view anybody has. It's simply not going to go away. And what we may see is the government actually stepping in a much more robust way to incent the development of these technologies and the infrastructure to use them. And that will make this look like a very different economic ecosystem 20 years from now than it does today.
I think they just dropped that one off there. Yeah, so maybe Rolly, maybe the top one there around Pilatus, I mean, having maybe an advantage being privately held, that maybe some implications here. I mean, do you have a point of view on that?
Well, you may not know, Pilatus is a privately held Swiss aircraft company. They've been around since 1938 or 9, something like this. Kind of one product at a time, do it very well and do it worldwide company. Very impressive. PC-12 over 1,600 in service now, and the PC-24 certified at the end of 17. Very nice aircraft, starting to make a big impact in the market in that superlight. The question is, being privately owned, yeah, it gives them a big advantage, but I would say being debt-free is another big advantage. They've managed to do new aircraft without having to go to the markets. I mean, this is all privately funded. It's an impressive operation. Their brand and their brand loyalty is off our charts. We monitor it very carefully, and they are doing a really nice job.
Thanks. Yeah, so maybe talk a little bit about, I'm sorry, go ahead.
I was going to say that having a better product is probably an advantage over other OEMs too. Not to be too cute about it, but that helps it also.
But I would add, and I think John could speak to this too, when you're private, you don't have to deal with John and I. And no, and our clients, right? No, and our clients, right? And the markets, for better or for worse, like to see smooth earnings growth quarter to quarter, year over year. And I think you could get this from any public OEM who builds aircraft. That's just not how the industry works, right? It's a lumpy industry, and sometimes you're making investments, and things move all over the place. So it's not an industry that aviation doesn't lend itself well to a short-term view, and the market tends to have a 3-month view, right? So if you're unshackled from that, sure. I mean, it makes their life a lot easier.
Yeah, absolutely, especially with the bankroll behind it. Maybe going back to sort of the OEM supplier relationship and how maybe that's been evolving, and that would have implications for the folks in the room. I mean, John, maybe some initial thoughts around how that's been evolving.
Yeah, I mean, so Ron mentioned earlier, and it's pretty visible and it's quite public at this point, and it's been happening for several years, is that the large OEs, for a multitude of reasons, are wanting to change the relationship, either actually in-source more or just get smarter on the things that they're doing. At the end of the day, it is really all about smoothing out what can be something that's quite cyclical. So even though they can't make more and more money on building airplanes despite the duopoly, I'd say there's probably an element of that, which is the reality of you got to keep the prices low, to keep the tickets low, to keep people traveling on airplanes, maybe. But there's still some more volatility there. The relationship is changing, and quite frankly, there's a certain amount of technology that is enabling some of that change, perhaps as well. I'm not the aerospace engineer; someone up here is. But is there something inherently more efficient about having a swappable engine, or the question I threw up on this slide earlier, is integrated propulsion actually something that makes sense going forward? And if there's integrated propulsion, then maybe there's actually more confluence between an OE and an engine maker long term. So propulsion is not really the best example of making lots of money really quickly, but just in terms of the supplier relationship changing, I think that's something that is true. However, airplanes do take a long time to change, so it's not a next year thing. It's not a 5 year from now thing. You're talking maybe decades, given how long some airplanes last.
Yeah, sure. I mean, on that front, I think both Boeing and Airbus woke up. Boeing, in a more public way, said, "Hey, we sell this airplane. Why don't we make money on it when we sell it if it's going to be in service for 25 years?" Just looking at the example of the commercial engine manufacturers, right? They sell the engine for X, and then over its lifetime, they can collect 5X in revenue. So, the guys that make the airframes want to do the same thing. And when they look, it's interesting, right? I mean, if you look at the business jet industry, let's look at Gulfstream. Probably about a third of Gulfstream's revenue is aftermarket support. And so, uniquely, private aviation has, I think, a better grasp on that than large commercial. But it really was the realization that there is a what do you call it, value stream for the life of the airplane that they're not tapping into that they would like to.
It's really just jealousy.
To some extent, but
I want that too.
Yeah, maybe we'll take one of the slides there. I mean, we talked a little bit about this yesterday, Shawn. Maybe you had a point of view relative to sort of the Go Green agenda and whether that's going to sort of maybe trigger some additional financing sources and be sort of an impetus to maybe help sort of spur some of this investment and activity. Do you want to share some thoughts on that?
You're going to have to repeat that to me one more time.
Sorry. I was reading off the slide. I mean, this was one that we had sort of talked a little bit about last night, or and yesterday afternoon, sort of around, what's going to be sort of some of the triggers, the impetus to sort of maybe help kick, some additional financing sources. I mean, I think, at the opening comments from Kirsten yesterday, sort of looking across the continuum, some of these things have been tapped up. I mean, could this be some sort of a catalyst that could drive?
I mean, the direct answer to that is there's certainly going to be parties whom, are devoted to developing these technologies and putting them in place and getting them to be accepted in the marketplace and accustomed to using them. And so I would absolutely expect to see financing sources come out of, those types and sizes of funds where they have as part of their charter those specific, altruistic approaches. So absolutely.
I mean, one big verb actually in public equities these days. So even though on average the newfangled thing that doesn't exist yet doesn't really get public equity investors' blood going, there are a certain number of public companies who have dedicated themselves to, or say to dedicate themselves at least to, actually not putting shareholders first, putting other stakeholders first. ESG is actually a very large, very popular theme within public equities right now. How you actually monetize it is open question, but there are some desires to attack these problems, which are long-term, and even though the public market is usually more short-term in nature, there is more, especially out of Europe, more focus on, especially on the public side, on thinking about at least the ESG angle and the way you evaluate investment, not as the only way necessarily.
However, I would add one point. If you look in the markets where there's been flight shaming, and you try to dig out, has it had an impact on air traffic? I remind everybody in the room, Europe has been the second quickest growing market, even though the European economy doesn't want to grow. Their air traffic growth has been the second largest air traffic growth behind Asia, right? So even in the markets that are acutely focused on environmental concerns, they still fly.
Except for Sweden domestic travel, apparently, which is a small percentage, I think. But no, and I agree. And even if you saw European market weakness in traffic, even if you saw it, I'm not sure how much is flight shaming versus Europe.
Fair enough. So another one here that, basically, this hybrid business model between a manufacturer being an OEM and then also being an airline or operator that's sort of maybe pervasive a little bit within some of the UAM opportunities here. I mean, Rolly, sort of what do you think about the sustainability of that and, and the viability?
It's an interesting development. I would say the thing that I think of right away is an OEM owning a fractional ownership company. We've seen a couple of examples of that. Cessna Citation had Citation shares, Bombardier had FlexJet. Those are two flameouts, I would guess you'd have to say. Interesting. I was involved in one of those startups, actually both of them, but sorry.
Don't put Rolly on your board.
When your boss asks you to do something, you do it, right? There you go. The funny thing is, it makes so much sense, right? The operator is the best and most knowledgeable user of the aircraft, therefore can have an immediate communication into the engineering group. Hey, we need to fix this. Here's the top 10. The reality is the operator has a set of skills. They hire pilots and people who fly these things mostly. And the OE is really focused on the engineering. And you got two cultures that don't talk to each other.
Yeah, if you look at the nature of the OEs, these are large monolithic corporate enterprises with views towards quarterly performance, and they become rather siloed, and it's a challenge within that culture to actually do what is recommended here, because you'll have three very competing interests. So I think it's a bad idea. It's why it hasn't worked. Let the business model, which can actually succeed, generate a reasonable return, attract the investment capital, and build its business model candidly without the interference of other interests.
You can end up with counter incentives, right? Unfortunately, right? As Rolly probably saw in his previous life, when the OE sells airplanes to themselves, it generally isn't a good idea, right? So if you can keep the incentives aligned, it could work. But my sense is why we've seen it not work, trying to keep the incentives on the right rails can be very difficult.
Yeah, thanks. All right, maybe we'll just do a quick sort of roll down here. I mean, in terms of, where do you think the most exciting innovation is coming in this space and maybe has maybe the most profound impact? I mean, maybe Ron, and we'll kind of go down the line.
Oh, geez. Let me think about that one for a moment.
All right, pass.
Going down the line. Yeah.
Okay. So I get most excited when I hear things here, and again, I'm the boring old public equity analyst guy, but it's when things that are being developed to attract, or I'd say attack, existing markets. So rather than rely on creating something new, just tell me here's something that exists and let's develop a technology that'll get at it. So to me, batteries, I think we've heard it a lot. Battery technology seems to be exciting. If you can get batteries to a certain point, you can actually start to eat into a $100 billion a year narrow body market, perhaps, by 2040. But nevertheless, something interesting.
I would say high-speed flight, right? I think that's, for me, probably the most interesting, most exciting place, right? If you look at, an airframe, generally speaking, it's a tube and wing. You can change the layout a bit. You can change propulsion, and so on and so forth. Not to belittle that, but really the next realm is speed. So I'm very, very excited about, kind of gets my blood going when you start thinking about supersonic to high supersonic speed vehicles.
Shawn?
When I think about the content of the conference the last couple of days, so I'm going to narrow the aperture here a little bit. I'm going to go back to what I had said earlier, which was there are going to be products and services that are unknown to us sitting in this room today that will derive as an unintended consequence of the development of these technologies. There will be an unmet need and it will be, 10 times the amount of application that, we're thinking about relative to electric vehicle for personal use. And it'll proliferate first, I think, across all segments of goods and services and products. And that's what I'm keen to see where that goes, because I think we're going to be very pleasantly surprised over the next, 5, 10 to 15 years, what emerges in our lives as a result of this, influx of exceptional amount of intelligence and ingenuity in engineering and capital.
Yeah, really.
I'm interested in the all-electric trainers. I think Buy Aerospace is onto this. Pipistrel, if you don't know them, a Slovenian company, look them up. On one end of the spectrum, I'm really excited about supersonics. I think I couldn't echo better the comments by Ron. This is coming. We put it in our forecast. We're the first to do that publicly a few quarters ago. This is coming. It's coming very quickly. Ariane will be first. They won't be the last. But we haven't talked much about supersonics at the conference. This is actually coming before all of the stuff we're talking about. The other thing I'm really excited about is talent, bringing talent into this industry.
Time's up. Are you pulling the plug on us, or do you want me to do some of these questions? Okay, thank you.
He says perfect.
Time's up. Thanks a lot.
Thank you.